Right now, the most powerful AI chips in the world can process trillions of calculations per second. But here's the problem. They're starting to sit idle, not because they're weak, but because they're waiting on data. And that delay, measured in milliseconds, is becoming one of the most expensive bottlenecks in all of AI. Hey guys, welcome back to the channel. I think that video does an excellent job of explaining or highlighting what is happening inside the world's largest data centers right now. We are entering into an era of the AI networking bottleneck. That'll be the focus of today's video. I'm going to highlight 3 companies that I've recently invested in because these companies are critical to helping us work through this potential bottleneck and helping to ensure that AI scales the way we need it to. If you haven't done it already, hit like, hit subscribe to the channel. Let's dive in and talk about the AI networking bottleneck. First, I want to just draw your attention back to a video that I posted on the channel a couple days ago. It focused on a $10,000 investment that I made across the entire AI stack. The reason I draw your attention to it is the 3 companies I'm going to focus on are in this portfolio. But you can see I invested $10,000 on everything from compute to memory to networking to optical and to even power. I'm going to focus on these middle layers today of networking and optical. And the 3 companies that I want to talk about today are Broadcom, Arista Networks, as well as Applied Optoelectronics. And the reason I picked these companies is these 3 companies control the roads that data travels on within AI center. They control the roads that data needs to move on for all of AI. If these companies fail, AI stops scaling. If these companies are successful, just one of them may turn out to be the next NVIDIA or Micron as we enter the next phase of the AI supercycle. But before we get started, we have to talk a little bit about the physics of scaling and why it's important for us as investors to understand. So there is a concept I want to focus on called communication overhead. And this is when we think about when we train a model like a GPT-5 or Gemini 2, the workload for these models is split across thousands of chips. When chips have, and these chips, as you know, they have to talk to each other constantly to sync their math, just move through their processes. And when it's a small cluster, that concept is easy, or that movement is easy. But when we start to talk about clusters of 100,000 GPUs or more, this becomes an issue. This is fact is that we start to see that the time spent moving data exceeds the time spent actually processing. This is a concept called GPU underutilization. And this is when we have a $30,000 chip that is sitting idle because it's waiting for a data packet. And it's a massive drain on the ROI for hyperscalers like Microsoft or Meta. In 2026, the goal isn't just more chips. The goal really now is 0 idle time for those chips. This is where the money is moving right now because there's one thing that no one is talking about right now in AI. The fact is, the faster AI gets, the more it depends on everything around it. So let's dive in and talk about our first company, do our first deep dive, which is Broadcom. You guys know Broadcom isn't just a networking company. They're the king of custom silicon. And while NVIDIA sells a one-size-fits-all chip, Broadcom helps hyperscalers like Google, Meta, Amazon build their own custom AI chips. For example, Google's TPU is a great example. And in 2026, we are seeing a shift, a massive shift from the InfiniBand, NVIDIA's proprietary product or network, to Ethernet. The reason why is because Ethernet is open and it scales better to the million GPU level. Broadcom owns the Tomahawk and the Jericho chipsets, the literal brains of the Ethernet switches. Broadcom recently projected their AI revenue to hit about $12 billion this year alone. They have a virtual monopoly on the high-end switching silicon that makes the scale out of AI possible. If you believe the future of AI is open Ethernet and not proprietary NVIDIA, Broadcom is your primary bet here. Now, they have some competitors I just want to draw your attention to. We've talked a little bit on this channel in the past, but their biggest competitor I want to talk today is Marvell. And we've spoken about it. We know Marvell is significantly smaller size company than Broadcom, but they are a fantastic company. They have great tech, but I chose Broadcom for my portfolio because of their mode of scale. Marvell has roughly about 20% of the custom AI silicon market today. Broadcom owns the lion's share overall. And in 2026, Broadcom's AI revenue hit 8.4 billion in a single quarter. That's nearly double what they did a year ago. Plus, Broadcom has the preferred status with Taiwan Semiconductor. So when wafer supply is tight, Broadcom will get their chips first. Broadcom's Tomahawk 6, which they launched in March of 2026, provides 102 terabits of throughput. Marvell is catching up, and they're a great company, as I mentioned, but Broadcom is setting the pace right now. I'm betting on the leader, and that's why I chose Broadcom in my portfolio, because in AI networking, the standard setter, which is Broadcom, wins the most lucrative contracts from the big hyperscalers like Google and Meta. That's the reason I chose Broadcom for my first choice. Let's dive into the second one, which is Arista Networks. Arista Networks, like why we said, well, while Broadcom was the brain, Arista Network builds the nervous system within AI. They were born to beat Cisco. That's their main competitor. They won the cloud titan era, providing software-driven switching that Google and Microsoft rely on, and now they're doing it again with AI. They recently launched the Etherlink portfolio, and these just are not boxes with wires. They use AI native features like packet spraying. In a normal network, if one path is crowded, the data stops. But with Arista's tech, it sprays data across every available path simultaneously to ensure no GPU ever waits a millisecond. And Arista's operating margins are legendary. They're consistently above 40%. They are the pure play on the AI backend. While NVIDIA faces competition from every angle, Arista's EOS software creates a moat that makes it incredibly hard for customers to switch. They just raised their 2026 AI revenue target to over $3 billion. This company is a compounding machine. Now, I mentioned that their big competitor is Cisco. So let's just take a look at how they compare to Cisco and why I chose them first. As you know, Cisco is the elephant in the room. We talked about for 30 years, Cisco owned the network, but I'm choosing Arista for their cloud-first DNA. Cisco is trying to pivot right now, but they're bogged down by legacy hardware and complex proprietary systems. Arista was built from day one for hyperscalers. As I mentioned earlier, their EOS, or their extensible operating system, is their biggest moat, is the gold standard for automation. In AI, with clusters reaching and exceeding probably now over 100,000 GPUs, you can't manage things manually. Arista's software allows engineers to treat the entire data center as one giant computer. And while Cisco's growth has been relatively flat, Arista just raised its 2026 growth outlook to 25%. Arista is taking market share every single quarter. They're not just a networking company, they are an efficiency company. And that's why I choose Arista as my choice in my portfolio over all their other competitors. Now let's talk about the third company today, which is Applied Optoelectronics. You guys know I've talked about this is a high risk, high reward play in my portfolio. And they certainly are smaller compared to the other competitors in the market. But they are meeting and trying to solve a major problem that we see today. Electricity is slow and hot. Light is fast and cool. And as AI clusters grow, we are hitting the copper wall. You simply cannot move 800 gigabits and the upcoming 1.6 terabits. You can't move it fast enough over long distances with copper. You need optical transceivers, and Applied Optoelectronics is perfectly positioned to meet this need. They have recently pivoted entirely to the 800 gigabit and upcoming 1.6 terabit market. They secured a volume order of over 200 million for their 1.6 terabit transceivers. They've secured this from a major hyperscaler, most likely Microsoft or Oracle. This is a capacity play with this company for me. They're expanding right now in Texas and in Taiwan to manufacture 500,000 units per month by the end of this year. Because they also manufacture everything in-house, they manufacture their own lasers, they have pure vertical integration, which is a big competitive advantage for them. This is an explosive layer within the investment stack I laid out. Optical is a big opportunity as we move forward. And when the demand for speed doubles, Applied Optoelectronics revenue can literally quadruple. this could be a great opportunity for us. But let's look at them compared to the big competitors in the marketplace. Guys, you know, I've mentioned them before, Lumentum and Coherent. These are massive companies, significantly larger both in market cap and price per share compared to Applied Optoelectronics. These guys are giants. They're diversified companies, Coherent and Lumentum. They make lasers for industrial cutting, for medical devices, and even consumer electronics. Applied Optoelectronics is a pure play for me. It's a pure play pivot compared to those diversified competitors. They are vertically integrated, as I mentioned, which is a competitive advantage overall. And they landed that massive $200 million order for their 1.6 terabit transceivers. It's giving a signal that the big hyperscalers like Microsoft, like Oracle, like others are starting to trust the manufacturing for Applied Optoelectronics. This is a high beta play overall. I mean, it's a high risk, high reward play, as I mentioned. If you want a safer play in this marketplace, Lumentum, Coherent are those. But just remember, Lumentum right now is $772 a share. Coherent is $276 a share. Applied Optoelectronics is about $100 a share right now. So significant value for this company. If you want a stock like Applied Optoelectronics that could literally triple as we reach the 1.6 terabyte super cycle late this year, I would go with this company overall. Just know that everything I laid out in this video and in my investment it does have risk. So make sure you evaluate investments with your own risk and tolerance, because when we're looking at networking, it is cyclical. If big tech pulls back from their spending in CapEx, these stocks and these players I laid out will take a hit. But when you look at Microsoft alone, positioning themselves are projected to spend $150 billion on AI infrastructure, we haven't seen any signal in 2026 that there will be a pause or a pullback in spending. So for me, why I didn't just invest in NVIDIA, why I invested across the whole portfolio stack and in these layers in particular, because as an investor, we need to understand where the next marginal dollar is heading. The market already understands GPUs, but it's still underestimating how critical data movement is becoming within AI. And companies solving this bottleneck, like I just laid out, will see demand accelerate as AI clusters scale. Because remember this, every new GPU added to a cluster increases the strain on the entire network. This is exactly why I built my portfolio the way I did. I invested in Broadcom for networking silicon. I invested in Arista for switching, and I invested in Applied Optoelectronics for optical connectivity. Because if the bottleneck plays out the way I think it will, these companies could become some of the biggest winners in all of the AI ecosystem. Let me know your thoughts, guys. Drop comments below. Hope you enjoyed the video, and I'll see you in the next one.